You found a small cap stock running up. You're ready to buy. You checked your criteria for stock selection, but there's one thing you may not have checked. And now the price keeps getting pushed down. By the end of today's video, I hope you will have an understanding of something called easy to borrow and hard to borrow, and why it matters for small cap momentum traders trading to the long side. Okay, what is easy to borrow and hard to borrow? Okay, easy to borrow means brokers have plenty of shares available to lend to short sellers. Okay, now I don't short stocks. I'm terrified to short stocks, to be completely honest, but I think it's important to have a basic understanding of short selling, even when you sell to the long side, so you can understand the price action. And this has become extremely apparent to me as a brand new trader recently. Okay, what is hard to borrow? It means there is limited share availability and shorts may not be able to get in, or they might have to pay high fees to do that, in which case then there will be more long sellers trading that particular stock. Okay, and this varies broker by broker. Okay, so a stock may be easy to borrow on Webull and hard to borrow on Thinkorswim. So you have to check on your platform. It's something that varies broker by broker. So I'm going to show you how to find it on Thinkorswim. Okay, so here, let's see, I'm going to select a stock. Okay, here we go, PBM. This is a stock that was running up this week, okay? And all you do is you go up here to the Analyze tab, okay? And here actually there's a wealth of information, but we're not going to go over all of it in the video today. Up here you'll see on the very top it says HTB, and that stands for hard to borrow. Let me put in another one that I know is easy to borrow because I traded it this week in spite of being easy to borrow, which inspired this video. Okay, so here actually it says not available to borrow. Now that's interesting. That might be because this is a Saturday that I'm filming this, but it was ETB before. Of course, I guess NTB is another option. Not available to borrow. But yesterday it was easy to borrow. Okay, so that is where you find whether the stock is easy to borrow or hard to borrow. Now, why does this matter? If you're only going long, why do you care what the shorts are doing? Well, you do care, okay, because if a stock is easy to borrow, a lot of short sellers can get in easily, okay? And on a small cap stock, heavy short selling means constant downward pressure on price. You can be right about the setup, okay? You can be right about the stock selection. This is what happened to me this week. I was right about stock selection, and I was right about my criteria. However, one stock was easy to borrow on another platform and hard to borrow on Thinkorswim, and I really struggled in making the trades. That was BIRD. Another stock, EFOI, was easy to borrow on Thinkorswim. Okay, hard to borrow means fewer short sellers can get in because either there aren't shares available to borrow or the price is really high to get in. And that means less short selling pressure working against you, okay? So I'm going to give you an example of a small cap, easy to borrow stock where shorts were visibly active. Okay, so let me pull up my trader view and let's look at yesterday. Let me show this on my screen here. Okay, so yesterday I traded EFOI. No, this video might not post for a week or two because I have other videos scheduled before that. But by the time you see this, it might have been a week or two since I traded this, but this was yesterday. Okay, and on Thinkorswim, it was easy to borrow. And that did give me pause. I don't always check before I trade whether a stock is easy to borrow or hard to borrow. Okay, and I think that is working to my detriment. So let me show you what it looks like in real time. All right, this is on the 1 minute chart. And the problem is, okay, on this particular trade, I was trading off of a bull flag pullback. I got in and it dropped immediately. Okay. And it was dropping quickly. And that could have been short sellers in the market putting downward pressure on the price. Because think about it. When people are buying the stock, right, that's driving the price up. A small amount of shares with high demand increases the price. But if people are selling the stock at the same time your people are trying to buy the stock, it can create this battle between short sellers and long sellers. And that can put some downward pressure on the price. Later on, you can see that it was consolidating sideways, right? We didn't have, here there's a clearer trend. This was a nice leg up, right? But here, look at this, it's consolidating sideways. And that, in my opinion, is likely due to the fact that there were more short sellers trading this stock. Okay, so you have people trying to buy and then you have people trying to sell at the same time. And so the price is just vacillating between a very narrow range. All right. Now, there were opportunities, okay, it created a lot of volatility. This is the one trade that I actually did well on that day. And here you can see that the longs were winning in this section here, okay? So maybe the shorts were getting in here. Now, I'm not saying that's exactly the reason why. I don't have a crystal ball, but if I select a stock that is easy to borrow, I know that this is a possible reason for downward pressure on the price. Okay. As a small cap momentum trader who is new to the game, is that something I want to risk? So the question that I've been asking myself this week after this big mess with EFOI, and also I really struggled on another trade that was not easy to borrow on Thinkorswim, but it was easy to borrow on Webull, BIRD. You know, these are stocks that everyone was making money on these stocks, and I lost money. I just continued to trade even though EFOI, even though it was easy to borrow. Now, does it automatically disqualify a trade? No, it doesn't automatically disqualify a trade. However, I'm going to say that as a new trader, it's important to be more cautious rather than less cautious. Can an experienced trader get better results trading an easy to borrow stock? Absolutely. Of course. So I'm a new trader. So for me, I've decided after this week, after my EFOI mess, I've decided to add checking for easy to borrow and hard to borrow to my pre-trade checklist. Okay, so I have step 1 is my stock selection, and I have 5 criteria for stock selection. Okay, that I use Warrior Trading's 5 pillars, which is I want to see that the price is between $1 and $10. I do trade over that, but rarely, okay? Because it uses up a lot of my cash account. 2, that the relative volume is more than 5 times the 50-day average. 3, that the float is under 20 million. Under 10 million is even better. And 4, that the price is gapped up more than 10% from the previous day's close, and 5, that there's a news catalyst. So that's where I start, okay? I might be a little bit looser with that in a hot market, but I'm a new trader, so I am having more conservative guidelines, okay? That's step 1. Step 2 is I start checking the indicators on my chart. I look at VWAP. I look at the price action compared to VWAP. I look at it compared to the 9 EMA. I look at the MACD. Is it red or green? And I'm going to add checking whether a stock is easy to borrow or hard to borrow to my list of checks. Okay. And is it going to automatically disqualify the trade? No, but it's going to give me the information I need so I'm not walking in blindly. Okay. And then I can walk in with my eyes wide open. I did know before I traded on Friday on EFOI that this was easy to borrow. However, I think I would rather just sit out on those until I'm more experienced. The longer I trade, the less I'm doing. And I think that that might be normal because, a more experienced trader has more setups at their disposal. They're more experienced. They're more likely to be able to see things before I can see them. So I'm deciding to rein it in even tighter, and I am going to be very, very selective about whether or not I trade an easy to borrow stock going forward. I've just had really bad experience twice this week. But it's definitely getting added to my pre-trade checklist so that I can make that decision with my eyes wide open. Okay. All right. So, I will be setting a weekly goal every week over on my Substack, and the link is below, where I select the next bottleneck in my day trading process. And I work on that goal, and I post Monday, Wednesday, Friday on that goal, and I track the goal through the whole week. And then we see on Friday, how did I do on that goal? Okay, some of my previous goals have been working on volume, working on micro pullbacks. So I will be working on a goal every week going forward. And also, I'm posting educational content on the weekends, and during the week I'm live streaming and posting daily recaps. So stay tuned for more. There's going to be lots more educational content. I'm posting it because I'm a new trader and I'm trying to learn. And I hope that if I have questions and concerns, you might have those same questions and concerns. All right, I'll see you next time. Trade smart.